Hey everybody, it's Daniel here from InfoVest. Hope you're all doing well. So let's talk about 2024. What is 2024 going to look like for the economy, for the stock market? Everyone's coming out with their own predictions, but what does InfoVest think about 2024? Well, before we start talking about 2024, let's talk about what happened and how it all started with the rate hikes back in 2022. Well, in 2022, everyone got blindsided and shocked with a massive amount of tightening that happened in that year, the amount of rate hikes that, Jerome Powell and many countries out there, the central banks out there did during that year. And actually, at InfoVest, we talked about this in our chat room where we talked about in 2021, December of 2021, where Powell came out and actually finally admitted, it was that moment there where he finally admitted that, hey, I'm wrong about inflation. Inflation is actually not looking like it's transitory, because if you remember in 2021, Jerome Powell was like, inflation's transitory, inflation is transitory. And finally, December 2021, he admitted he's wrong and he needed to do something about it. So he said, okay, we're going to do something about it. We're going to start raising rates. And then when we looked at it, we talked about it in our chat room. We said, okay, well, with this tightening and higher rates, we could see the markets go down because there's going to be a lot of tightening that's going to be needed. And we brought in the Taylor rule. The Taylor rule where it says that in order to bring inflation down, you need to bring interest rates above the inflation level. Well, inflation back then was pretty high. That means rates need to move quite significantly. Maybe not at that level at that time, but it needs to move high enough. And people were really shocked in all of 2022 to see Powell continue to raise rates. People were angry, like, why are they raising rates? Why is the central bank doing this? Are they out of their mind, etc. Well, if you look at macro and you look at history and you put it all together, you'll understand that these cycles that happen in the economy and the behaviors of the central banks, the past may not be exactly the same as the future, but it often rhymes, and you often see the patterns repeat itself. And we discuss about this in the InfoVest course. We have this, we talk about macroeconomics, we tie it in with the markets, with stocks, with futures and all that. If you're interested, check out the links below or send us a email at info@infovesting.com if you're interested in taking that course. But going back, with all the tightening, we said in December 2021 that we could see the markets go down. Now, a lot of people on the web and on Twitter were saying that, okay, we've seen past rate hikes and that generally doesn't lead to markets going down. But it's not about that. We've seen past rate hikes and thus, markets generally go up. Even if you have some tightening, it's all dependent on where you are in the cycle and what has happened before that. Well, what happened before 2022, before all the rate hikes and the tightening? What happened in 2020 and 2021 was all the QE, the money printing, was that the whole world was shut down. Supply chains were shut down. Prices, inflation skyrocketed. Money was flowing left and right, real estate prices going up, stock market rallying, crypto going crazy, everything going insane, right? So that's what happened, and there needed to be a lid, something to control it, because remember, the central bank out there is there they got, especially the Federal Reserve, they have a dual mandate. They got to control inflation, create price stability, and number two, make sure employment is at a good level. Well, employment was no problem at that time, and still right now as well. But what was a problem at that time was inflation. So they were failing at their other mandate, was to create price stability. Thus, all the tightening that we saw in 2022, thus why the stock market sold off in that year. Now, that sell-off was just an orderly sell-off. It wasn't a crash. That was not a crash at all. And in fact, as soon as everyone started to see closer to the end of the year, of that year, that we saw that markets come down, stocks sell off, bonds as well with the higher yields, the yield curve inverting as well, and in, you could say, October of 2022 is when people were max short, were super bearish. Everyone was saying 2023, we're getting the crash is coming 100%. 2023 first quarter, it's coming. And what happened in 2023? Complete reverse. The stock market rallied, right? We had basically the S&P 500, NASDAQ bottom and rally all the way to now. Fast forward, it's now 2024, right? Or I should say, let's talk about end of 2023, what happened there first, right? In December, we had Dow Jones make all-time highs, went above the 2022 level, right? We had Russell 2000 also finally break out of its little range that it was ranging in all of since April of 2022. We had NASDAQ make all-time highs as well, and the S&P 500 reach to the highs of 2022, right? All in 2023. Completely reversed the move because everyone was max bearish, everyone was max short, everyone was max doomsday. Until now, it's 2024. And 2024, what do we see now? Well, being the first week of, the year of January, we're seeing a sell-off in stocks and in bonds as well. But more of an aggressive sell-off in stocks because everyone's going a little bit too wild and crazy, and everyone had too much fun during Christmas and during December last year. We had the Santa Claus rally, and now people are offloading, and whoever's going long here are panic selling or getting out of their trade. So what does this mean? I mean, it's still too early to say anything. It's still the beginning of the year, right? But we are already started to see some sell-offs in the equity markets. And what does this mean in terms of what can we expect for 2024? Right? 2022 was the year of tightening. 2023 was the year that everyone got it wrong, and it was the year where the markets rallied. And it was also the year in December where Powell officially pivoted, where Powell, came out and said and penciled in 3 rate cuts for 2024. So, okay, we now know rate cuts are coming. You and I know 2024 rate cuts are coming. Now what? What else do we look forward to? Well, the markets are pricing in more rate cuts than what the Fed is saying. The markets are expecting that this month in January, we're going to get a 10% chance of some rate cut and a 70% chance of the first rate cut in March, while the Feds were pushing back on that idea and was more talking about that you could see maybe the first rate cut in the summer of this year. So the expectations in 2024 are sky high for rate cuts early, easing early, massive amount of easing 2024. And the expectation is if there's going to be all this easing that is coming very, very soon, then that means stocks to the moon, crypto to the moon, Bitcoin to the moon, bonds to the moon, everything goes up. Real estate, blah, blah, blah. That's the risk for 2024. The risk is the expectation that this is a soft landing, that we're going to get rate cuts in a soft landing. You don't get rate cuts in a soft landing. You don't get massive easing in a soft landing. So whatever the expectation is for 2024, I think you could expect some disappointment, which would bring in some shock and shock the markets, the equity markets, especially if the Fed does not deliver a rate cut in March. So I'll say it again, if the markets find out from now till March that the Fed is not delivering on a rate cut, you're going to expect some panic selling in the markets. Now 2024 is going to be very difficult. It's going to be volatile. It's going to be choppy. The bulls and the bears are both going to be wiped out. It's going to be difficult for both. There's going to be so much confusion. We're going to have to be data dependent. We're going to have to be dependent on the communication from the Fed, dependent on what the hell this data means, what the economy is trying to tell us, and is this good? Does this mean that we're going to see easing? And if we're going to see some sort of easing, then, are we going to expect the markets to go higher? So all of this is going to be really, really important. And I discussed this more in my InfraVest private chat room, where I go over the markets on a weekly basis, looking over all the stocks, bonds, commodities, currencies, looking at the macro data, dissecting what this all means. If you're interested, send us an email. But what I can say right now for 2024 is that we can expect some sort of volatility, some sort of confusion on both sides of the playing field for bulls and the bears. And we can expect starting to see data get weaker and weaker. Now, we did get ISM data today, and we did get the JOLTS number, which basically gave soft landing-ish vibes. And the stock market and bond market went up. And then what happened after that, 30 minutes after the data? Completely reverse, plunge, sell off for the rest of the day. So, and also another theme for 2024, what we can expect is that when we start to see weaker data and we start to see more and more of this data start to deteriorate, the jobs number getting worse off, the growth numbers, the GDP numbers, although yes, inflation may be, coming down, but not at 2% yet. The question is are the markets going to be happy about that? Like we saw last year. That, weak data, soft landing-ish data, that basically means that, we achieved soft landing and we're going to see some rate cuts and it's not going to be that bad. But if we're going to get soft landing data, then why should you see any rate cuts? And if you're not going to get those rate cuts, does that mean that the market's got to reprice everything that they were optimistic about in 2023? So 2024 is going to be quite difficult. In 2024, you can expect that we could start to see the deterioration of the data. And the key question is going to be in the markets is when this data, or if this data ends up becoming weaker and weaker, how weak does it get? And when it gets weak, how late is the Fed going to be when it comes to reacting to the data? Although we heard from the Fed last year that they told us they could do rate cuts, but still be doing QT, quantitative tightening, still tightening up the balance sheet, the liquidity factors and whatnot. So even though you could be getting rate cuts and at the other side of things QT, those rate cuts may not be enough to prop up the markets higher. Which means that QE is probably going to be needed, very much needed. The easing of printing of money is going to be needed to bring the markets back up higher. And that's what's going to be important. And the level of how much is QE is going to be needed is going to be dependent on how severe the recession is. And when it comes, the QE, if it comes, that's also going to be a very important question as well. Because if it doesn't come, or if the Fed's too late to do any QE or come out to save the markets or the economy, and there's massive amount of damage happening, you can definitely expect panic. And remember, when people get into a trade, nobody panics to get in. Everybody panics for the exit door. Everyone panics to get out of the trade. So if that's the case, we've rallied all of last year. If 2024 is the year where you're going to see some sort of panic, it would wipe out a lot of longs. So we'll see what happens, right? Could it be that, maybe you do get continuation of this rally, and we rally and further, and then eventually there's a pivot point? Sure. Could you see volatility and choppiness in 2024? Sure. Could you see later in 2024 a complete plunge down? Sure. 100%. Anything is game. Anything is possible. But I think the biggest theme for 2024 is going to be quite confusing, quite choppy. Everyone's going to be giving their own spiel on what they think the economy is doing, what the markets are. You're going to get the bulls come in and say, this is the time to buy, this is the time to buy your real estate, buy your stocks, go. And then you're going to get the bears saying that, okay, no, it's time to short, it's time to, back off, it's time to attack the markets with massive short amounts, shorting it as much as you can, because we're going to completely plunge and there's going to be some sort of credit event. Eventually, I do believe that the bears are going to be right, but it's not going to be an easy game. It's not going to be an easy battle. And until we start to see how bad this recession is or what the credit event, it wouldn't be surprising to see a shock of 10-20% decline. Possibility, maybe even more, right? So anyways, those are my takes, what I think about the 2024 outlook. More about choppiness, more about confusion, and more dependent. The most important thing is dependent on the expectation versus the reality. And what expectation am I talking about? This easing expectation, right? The expectation of soft landing, because that's what's priced into the markets right now, that we're getting the soft landing, or this is the soft landing and this is it, and the expectation that we're going to get the easing and the cuts and everything's going to be fine. If that narrative starts to change very quickly and things start to get sour, it wouldn't be surprised to see some sort of shock in the markets. Anyways, let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers, bye.